Could this be the first halving that didn't produce a gigantic bull run? If you've been around the block, you know that Bitcoin halving events have historically been huge moments, often triggering bull runs. But hold your horses. This time, we've got two wildly different scenarios on the table. On one hand, some are saying there won't be a bull run due to various economic factors. On the flip side, others argue that this halving could go absolutely ballistic, thanks to things like ETFs and big institutional money pouring in. We will dissect both arguments in detail, explore the role of economic conditions, institutional investments, and try to figure out what this all means for the future of Bitcoin. Let's begin with the more grim picture. But first, we want to remind you this video is for entertainment only. This is in no way, shape, or form investment advice. Argument number 1, no bull run this halving. Alright, let's dive deep into the first argument. The global economy is going through some turbulent times, and it's essential to understand how this could impact Bitcoin's trajectory, especially with the upcoming halving. First off, the current economic landscape is a bit grim. We've seen high inflation, high interest rates to control inflation, and high prices even as inflation eases. It doesn't make sense, but from the price of your morning coffee to that of gas, everything seems to be on the rise. This inflationary environment is squeezing the average Joe and Jane, making it harder for them to save, let alone invest. Now, let's talk numbers. Recent statistics paint a rather bleak picture. A significant portion of families are living paycheck to paycheck. The dream of owning a home, sending kids to college, or even just having a comfortable retirement seems to be drifting further away for many. In such a scenario, investing in something as volatile as Bitcoin might not be on everyone's priority list. When families are struggling to afford basic necessities, splurging on what many still consider a luxury investment might not be feasible. Remember the last bull run? Oh, what time that was. Bitcoin's price skyrocketed and there was euphoria all around. But this time around, things are different. With no significant stimuli in sight and the economic challenges we just discussed, can we really expect another bull run post-halving? Only time will tell. Was the last bull run a fluke? Let's take a trip down memory lane. The last bull run was nothing short of spectacular. Bitcoin's value soared and the crypto community was buzzing with excitement. But what really fueled that surge, and more importantly, could it have been a one-time thing? Several factors contributed to the previous bull run. For starters, there was a massive influx of new investors, both individual and institutional. The media was all over Bitcoin, and there was a general sense of FOMO, fear of missing out, among the masses. Additionally, technological advancements and increased adoption by businesses played a role. However, a significant catalyst was the economic stimuli provided by governments worldwide. With more money in circulation and interest rates at historic lows, many saw Bitcoin as a lucrative investment. Fast forward to today, and the landscape looks quite different. The global economy is grappling with challenges like high prices and interest rates. Families are tightening their belts, and discretionary spending is taking a backseat. Given these economic headwinds, it's worth pondering, was the last bull run an anomaly, a result of unique circumstances that might not repeat themselves? While Bitcoin's fundamentals remain strong, the external environment this time around is undeniably more complex. Argument number 2. Halving goes ballistic. Alright folks, let's flip the script and dive into a more optimistic scenario. What if, despite the economic challenges, the upcoming halving sends Bitcoin's price to the moon? Sounds exciting, right? Let's unpack this. The transformative power of institutional money. Now, I know we've been talking a lot about the average Joe and Jane struggling to make ends meet. But here's the thing. While many individuals might be tightening their belts, big institutions are playing a whole different ballgame. These financial giants have deep pockets, and when they make a move, the ripples are felt across the market. In recent years, there's been a growing buzz around institutional interest in Bitcoin. And it's not just idle chatter. Major institutions from Wall Street banks to tech companies are increasingly eyeing Bitcoin as a viable investment. Take Tesla, for instance. The electric car giant made headlines when it disclosed a $1.5 billion investment in Bitcoin. And they're not alone. Fidelity, Square, and even some pension funds have dipped their toes into the Bitcoin pool. So, why does this matter? Well, when institutions invest, they don't just buy a Bitcoin or two. They buy in bulk, often purchasing hundreds or even thousands of Bitcoins at a go. This kind of heavy buying can drive up demand, and with it, the price. But it's not just about the money. Institutional involvement also brings a level of legitimacy to Bitcoin. It sends a signal to the market that Bitcoin is not just a passing fad, but a serious investment worthy of attention. And as more institutions jump on the bandwagon, this sentiment can create a positive feedback loop, further driving up demand and price. So, while the economic landscape might seem bleak for many, the influx of institutional money could very well light the fuse for Bitcoin's next big boom. The role of ETFs in a potential bull run. Spot Bitcoin ETFs will open the floodgates for institutional investors. Why? Because they offer a more familiar and regulated way for these big players to invest in the crypto market. Instead of navigating the sometimes murky waters of crypto exchanges, institutions can simply buy shares of a Bitcoin ETF, much like they would with any other stock. This ease of access could be a game changer. With ETFs in the mix, institutions that were previously on the fence about crypto might be more inclined to take the plunge. And remember, when institutions invest, they go big. This influx of capital could drive up demand, and with it, the price of Bitcoin. Moreover, crypto ETFs can also be seen as a nod of approval from regulatory bodies, further cementing Bitcoin's position in the mainstream financial world. So, while there are many factors at play, the rise of ETFs could very well be the catalyst that propels Bitcoin to new heights in the next bull run. Factors making this halving stand out. Every Bitcoin halving event is a spectacle in the crypto world, but this one, it's shaping up to be truly exceptional. Let's break down why. First and foremost, the institutional interest in Bitcoin is at an all-time high. We're not just talking about small hedge funds dipping their toes in the water. Major financial players, the big whales of the investment world, are diving deep into the Bitcoin ocean. Their involvement brings not just capital, but also a level of legitimacy and trust to the crypto market. Then there's the rise of ETFs. As we discussed earlier, ETFs are poised to revolutionize the way both individual and institutional investors engage with Bitcoin. They offer a streamlined, regulated avenue for investment, potentially ushering in a wave of new capital. Now, let's put this into perspective. Previous halvings were significant, yes, but they didn't have this potent combination of institutional backing and the transformative power of ETFs. Could we be on the brink of a new bull run? While the future is always uncertain, the stars seem to be aligning in Bitcoin's favor this time around. This halving might just be the event that takes Bitcoin to unprecedented heights. Counter-arguments, the middle ground. Alright folks, let's take a step back and look at the middle ground. Because, let's face it, life isn't always black and white, and the same goes for Bitcoin and its upcoming halving. So, what are the economic indicators saying, and how could they play into either of our arguments? Economic indicators. First up, inflation. We got rising prices across the board, even if inflation is easing. Now, high inflation could be a double-edged sword. On one hand, it might push people to invest in Bitcoin as a hedge, supporting the bull run theory. On the flip side, when people are struggling to make ends meet, investing in something as volatile as Bitcoin might not be at the top of their to-do list, giving credence to the no bull run argument. Then, there's the interest rate situation. Higher interest rates usually mean higher borrowing costs, which can slow down business investments and consumer spending. This could cool the enthusiasm for Bitcoin, especially for institutional investors who might find bonds and traditional assets more appealing. But any of those traditional assets aren't yielding much due to economic downturns. Bitcoin might just look like the shiny alternative, right? And let's not forget about unemployment rates. If people are out of work, they're not investing in Bitcoin, period. But if job markets stabilize and people have some extra cash, you better believe some of that money's going into Bitcoin, especially if they think this halving is the ticket to the moon. So you see, these economic indicators are like a mixed bag of nuts. You've got some that could totally support a bull run and others that might make you think twice. It's all about how these factors interact and influence investor behavior leading up to the halving. What's your take on this? Do you think the economic indicators are pointing towards a bull run, a bust, or something in between? Drop your thoughts in the comments below. Public and institutional sentiment. Alright, let's shift gears and talk about the mood in the room, or should I say the market. Sentiment is a big deal, folks. It's like the emotional weather forecast for investing, and right now, we got a mix of sunshine and clouds, both among individual investors and the big institutional players. So, what's the public thinking? Well, with all the economic uncertainty, many are skeptical. They're thinking, should I really put my money into Bitcoin right now? But then again, there's a solid group of die-hard crypto enthusiasts who are as bullish as ever. They're the ones tweeting to the moon, and they could very well be the catalyst for a new bull run if their enthusiasm catches on. Now, let's talk institutions. These are the whales, the big fish, the ones who can move markets. And guess what? They're showing interest. Companies like Tesla and MicroStrategy have already dipped their toes in the Bitcoin pool, and rumors are swirling about others joining the party. But let's be real, they're also cautious. They're keeping an eye on those economic indicators we talked about, and their moves could be more calculated. So the sentiment is mixed, but it's potent. It's like a cocktail that could either give Bitcoin the kick it needs to soar post-halving or be the buzzkill that brings it down. What's your read on the market mood? Let me know in the comments. What does this mean for investors? So you've heard both sides of the argument, but what does all this mean for you, the investor? First up, if we're looking at a scenario with no bull run, you've got to be cautious. High inflation and interest rates are no joke, and if you're living paycheck to paycheck, maybe now's not the time to go all in on Bitcoin. But hey, it doesn't mean you can't invest at all. Ever heard of dollar cost averaging? It's a strategy where you invest a fixed amount regularly, regardless of the price. It's like dating, you don't have to commit all at once. Take it slow, test the waters, and see how it goes. Now, what if the halving goes ballistic? Well, first of all, don't let FOMO drive you. Yes, ETFs and institutional money could pump up the market, but remember, what goes up must come down. So diversify. Don't put all your eggs in the Bitcoin basket. Look into other assets, maybe even something like Ethereum or Solana. But here's the kicker, folks. No matter which scenario plays out, do your own research. I can't stress this enough. Listen to experts, read up on market analyses, but at the end of the day, make your own informed decisions. The crypto market is like a roller coaster, and you've got to be prepared for all the ups and downs. This is not investment advice by any means. So, there you have it. Whether you're gearing up for a bull run or bracing for a bear market, knowledge is your best weapon. Equip yourself, strategize, and most importantly, stay flexible. The crypto world is full of surprises, and you've got to be ready for anything. Wrapping it up. Alright folks, we've covered a lot of ground today. From the gloomy economic indicators that could spell a no bull run scenario to the shining promise of ETFs and institutional money that could send this halving into the stratosphere. The key takeaway? Do your own research and be prepared for anything. The crypto market is as unpredictable as it is exciting, and you've got to be on your toes. If you like this video, be sure to subscribe, and we'll see you in the next one.